Welcome back. I'm Pratap here. Today is 27th March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. So I kept all the videos in a playlist, supply demand zone price action course. Even I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page. And then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis discussion. Yesterday we identified 5 high liquidity zones. Out of these 5, only one high liquidity zone is executed. That too during last 1 hour of the trading. And another one is violated, but there are some special reasons for identifying the zone is violated. And these special reasons will give you a different experience for you today, especially for who are learning and even for experienced people also. Such kind of observations are required when you are working on the market and analyzing the charts. Definitely you should have a excuse me. Definitely you should have a overall view on the market. That we will discuss. First, let us look into the trade we got success. That is LTIM mine tree. This is a 75 minutes high liquidity demand zone. And let me show you the 75 minutes high liquidity demand zone. I am changing the time frame to 75 minutes. And let me show you where the zone is created. Here we have a rally, 6 base candles and a rally. This is the 75 minute zone. This 75 minute zone again I fine tuned with 5 minutes time frame. 15 minutes time frame. Here we have 2 zones. This is a rally, base rally, and again we have a rally, 2 base candles and a rally. And inside again we identified fine-tuned 5 minute zones. The first one is already tested. The second one we should plan the trade, but let me show you how we fine-tuned in 5 minutes. Let me show you the 5 minutes zones. And let us verify here. So we have a rally candle, 1, 2, 3, base candles and a rally follow through candles. This is one 5 minute zone. And then we have a drop, a base candle and a rally candle. Drop base. And below here we have a stop loss. The blue color line, whatever I have drawn, that is the 3% ATR. That is the 3%. Because everyday analysis videos, I am providing you these stop losses. If you take the value, it is around 3 rupee 30 paisa. So if you deduct to the distal line of this particular zone, and this is the place where the stop loss comes. And risk management is also important here, that I will show you how I planned this trade during last 1 hour of the trading, because this is a crazy trade. I think only crazy people like me only will accept such kind of trades. But anyway, success is a success. Taking risks is always a challenging. It is a high risky trade. How I managed, let me show you the analysis I did before I took the trade. And this one is already tested, the first one. Because it is tested, didn't focus much on this zone. And it is violated today. And I already told you, I don't know how many of you remember, I think a couple of times I told you, during last 1 hour, if anybody wants to plan your trades on high liquidities, you should not target 15-minute zone. You have to target only 5 minutes only. Because the last 1 hour, you may not be seeing much movement in the market. Achieving a 15 minutes target is very, very difficult. Previously, I have shown you couple of times the last 5 minutes trades, last 1 hour trades, and we kept only 5 minutes as our target. Exactly the same way, when prices are entering into this zone, this is the 5 minutes drop, base, drop. Of course, we should have RR should be there, a minimum at least 1:3 RR is best. For highly experienced people, 1:2.5 also they will accept. Here I planned 1:3 RR. Because the moment you add the stop loss, the risk is also increasing. You can't achieve 1:3 RR. Further, I did some adjustment. You know the tool, right? This is this long tool. In TradingView, we have a long position and short position tool. Previously also, once I explained in one of the videos how to adjust risk reward with the help of these tools. These tools not only will help you to provide how much risk is there, but it will also help you for adjusting your risk. Risk management, it will help. Today exactly I did the same way. See, anyway, this target is fixed, the 5 minutes target, and this is the stop loss is fixed at our stop buffer. By adding the stop buffer, you can't change them. What you can change? Entry you can change. See, entry you can take at this type 2 digital line. This is the type 2. Actually, type 1 and type 2 are same here. The same, because the high of the candle and high of the body both are same. For the 1 minute, for the 5 minutes candle, I shown you earlier. Here itself, high of the zone as well as the highest body of the candle also started from here. So if at all, if you want to reduce the risk, based on your RR, you can reduce. See, if I keep this long position tool up to the proximal line, I am getting only 1:2.17 RR. Only 2.17. So to get 1:3 RR, what you have to do? Just reduce the value until you receive. Slowly you reduce. See, now you got 1:3. So what is the entry? You double click this. Here it will show you your entry price. 4919.40. That is the way you can plan. Once prices enters into that, then only you take the trade. Otherwise, suppose sometimes you may ask a question, just price touch this line and it will go up. If that is the case, you will miss the trade. Why you are not taking? Because you are not getting your RR. Because you are not getting your RR, you are just leaving the trade. Anyway, you have to leave. But if prices comes here, you get your RR. See why I told you crazy people like me only take such kind of trades. See what happened after I took the entry and prices were moving here only. And finally here violated the zone, pierced. The zone is pierced. But the prices did not come below the stop buffer area. The blue color line is the stop loss because we added the stop buffer. Because every day I am publishing stop buffers. Stocks near demand and supply zones, and also the other 2 more reports we are generating. Bullish and bearish trade setups for monthly income trade, weekly income trade, and short-term income trade, that is DIT and HIT. So total 3 report videos we are publishing every day. At the end of the video, in any one of those videos, at the end of the video, you can find stop buffers. Every video I am generating. Maybe sometimes I may forget in one of the videos, but definitely out of these 3 videos, minimum 1 video you will find the stop buffers. Probably the last 2 or 3 minutes of the video you can find stop buffers. So from that only I picked up and I drawn this line. It has the video has shown, the video value was shown 3.3 rupees 30 paisa for 3% ATR for this particular stock, L&T Mindtree. So from the digital line I deducted the value because this is a demand zone. If it is a supply zone, you need to add. I already explained these concepts in our training program. So that's why based on this stop buffer I adjusted my risk. The moment prices entered, took the trade, but after that the zone is pierced, but still probably there are more pending orders in the stop buffer area, which protected the trade, how it protected the trade. And see what happened when it reached the target, the last 5 minutes. Why I am saying crazy? I am crazy because carrying the positions till the last closing hours. I was thinking, in case if it did not reach the target, I thought of exit the trade somewhere at 3 o'clock, some 26 or 27 minutes, somewhere around. I want to exit. That was my plan. But the last 3 o'clock, 20 minutes candle, 5 minutes candle, it reached the target. Finally, it is a successful trade during the intraday, but as per the futures. See how much profit it has given. Sorry, mistake. This is a long trade. So 2,595 rupees profit it has given, which is 1.9% ROA as per one futures lot. 1.9% ROA during the last 1 hour of the trading. Definitely it is a crazy trade, no doubt in that. But this is a good profit. Normal intraday traders, they feel 1% profit is a very good profit during the intraday. 2% means it is an excellent profit. It's an excellent trade, intraday point of view. Of course, our high liquidity zones point of view, 6.1 is the average. But that we are targeting for the 15 minutes time frame. That's why we are getting that 6.1% ROA. And high liquidity zones are having capacity to push the price up to that level. That's why all these days we are getting a huge profits. But this is just last 1 hour trade. Many people don't trade. Intraday traders, mostly they don't take risk during last 1 hour. They don't take. Except some crazy people like me. What is there? If you lose small amount, we will lose. Okay, fine. But it is a successful trade. There is a reason why I felt this trade definitely work, because even though it is last 1 hour, see almost price was it's falling down. From here, see the price action. All of a sudden it slowed down. Why? Because there is a strong demand in this area. That is the reason why I have full confidence that definitely it will work. But I didn't expect it will carry till the last minute of the trading hours. I thought maybe in 15-20 minutes the trade will be completed. But what happened today? Not only demand, even the supply is also very strong here. See, the prices are moving in a narrow range. When it happens, when demand and supply both are equals, that means demand is strong, supply is also strong. In such kind of cases, such kind of things will happen. That could be one reason. And anyway, by the time prices entered here, the supply is probably become weak. Now demand has taken control. And finally, in next 1, 2, 3, 4, 5, in 25 minutes, it pushed the price up from here. But till here, prices moved in a narrow range. Slowly the supply is consumed and demand is slowly eating all the supply. It took patience. Patience is very important. Especially in supply and demand zone price action, if one wants to get a success, a lot of patience to be there. So this is about LTIM mind tree. And the next one, this is the question I asked about. First we will go to daily time frame. It is a daily zone. METROPOLIS. So in the Telegram group, I asked you, find the reasons. And also I gave you a clue by providing 2 points. What is it I told you? How deep you are analyzing the chart and observing the market. That point itself gave you one clue. In the message I told you how deep you are analyzing the chart and observing the market. Observing the market, there is a clue. Once I will give the explanation, you will get clarity. And the second clue also I gave you. Supply demand zone price action based on institutional imbalances. We are using, our theory is based on institutional imbalances. What exactly the meaning of institutional imbalances? I explained in lesson 2. Actually, it is my favorite lesson. Lesson 2. If you understand the institutional imbalances, understanding supply demand zone price action is very, very easy. Whatever the concept I explained in lesson 2, probably that is applicable in today's mind tree analysis. Probably you people will understand the real essence of the concept I explained in lesson 2. Lesson 2 is a deep understanding concept. If you are understanding the essence of lesson 2, definitely you are going to be a very successful trader, because the entire theory is based on lesson 2 what we learned. Lesson 2 explained balance, imbalance. Both I explained with diagrams. How institutional activity will create imbalance. That is what I explained you in lesson 2. How we get pending orders in a zone based on imbalances. That is also explained in lesson 2. If you just like that, if you finish lesson 2, probably you might have missed the most important essence you are supposed to learn. Those who learned lesson 2 word by word, carefully, they would have got a deep thinking in their mind that would have been already developed. A deep thinking knowledge about supply demand zone would have been developed in lesson 2 itself. Previously also once I hinted. I gave the hint. Lesson 2 is a very important video and it is my favorite video. Let us discuss that. Before that, what is that our software has identified? This daily zone as a drop, 1, 2, 3, 4 candles. These 3 base candles, this is a medium size leg candle. It can be part of the zone. And finally, this is the leg out. And this daily zone, we fine-tuned with 75-minute zone in this area here. So let me change the time frame to 75 minutes. How I fine-tuned with 75 minutes, let me explain. Here I didn't identify the 5 minutes. The reason is a lot of base candles. 1, 2, 3, 4, 5, 6, 7, 8 candles are there. That is one of the reasons why I just left it. But here we have a rally candle, 1, 2, 3 base candles and a drop candle. You may ask a question. The drop is not very great. Yes, it is not great. But this is good enough to consider for fine-tuning the zone. This is good enough for fine-tuning the zone. Because this candle has come completely out of the zone. So it's a good candle. Some people may not convince this is not long enough. Maybe it is medium size, you may say. But not a problem. There are some situations you can consider when medium size candle having sufficient length but completely coming out of the zone. Then at the time you can consider that candle as a leg out. But these are all the advanced level observations. It takes some time for you to get into those levels. But fine tuning, but time being, I'm saying for fine tuning the zone you can compromise some extent. If this is a little bigger than medium size, or you have benefit of the doubt whether to accept or not, you accept if the candle is coming out of the zone. After that, price movement is also, see, there is a down price movement is there. All these are all positive factors. Anyway, this we have to see, ultimately we need to identify the institutional order flow. That is our challenge. So inside this 75 minutes, you have 15 minutes zone. See here you have a ERC candle as a leg in. You have 1, 2, 3, 4 base candles and then a drop candle. You may not convince this is a drop candle, right? Add the hidden body here. The moment you add the hidden body, see this entire candle is completely body. It is having a drop candle. After that, price has moved very close to the fine-tuned area. Actually, it is not tested. If you look into the fine-tuned area, 5 minutes level, you get clarity. Now I am changing the time frame to 5 minutes. See here, you have a rally candle, 1, 2, 3, 4, 5 base candles. And here you have a drop candle. If you add the hidden body, this is a very big drop candle. After that, the price has moved down. This is not sluggish, because somebody is saying it is sluggish. It is not sluggish. Sluggish means price is going up and going down, up and down within this, but they are all coming down. Okay, here, okay, some people said it is tested, but they didn't, prices didn't get into this zone. Even it didn't touch the type 2 proximal entry. Maybe if you are drawing from type 1 proximal, you might have considered this is tested. But generally type 2 level we are considering whether it is tested, because most of the times we are taking entry there. And moreover, see the depth, the width of this zone. It is having a good order flow here. So definitely we can consider this as a rejection also before this. In case, see here, came down and then again another candle down. That way also you can consider. But anyway, but only negative thing is, after that there should be a drop. But see here, lot of consolidation here. Why this zone is not having so power? Maybe it just came down here, but lot of consolidation here. But in generally what happens in high liquidity zones, you don't see such kind of price action. When you see such kind of price action, definitely there might be something wrong with this zone. But if you look into the fine tuning point of view, it looks excellent. Definitely we are tempted to take a trade here, but there is a strong reason why we should not take the trade. Let us go back to lesson 2, what you learned. Lesson 2, I told you 2 important concepts. Balance versus imbalance. What is balance? 2 institutions are fighting each other. It need not be 2 institutions. It can be a group of institutions. A group of institutions are buyers, another group of institutions are sellers. They are fighting. How they are fighting? One is buying the stocks and another one is selling the stocks. And whatever he is selling, we are buying. Whenever we are buying, again he is selling. He is keep on selling and we are keep on buying. So at the time what happens? Prices will be moving in a narrow range. When lesson 1.1 I clearly explained. when demand and supply are equal, prices will be moving in a narrow range. Are the prices moved in a narrow range? Yes. We have a rally. We have these base candles. They are moving in a narrow range. What it indicates? What does it indicate? It indicates there is equal demand and equal supply. After that, what I explained in lesson 2, all of a sudden there is an imbalance. Because of the imbalance, prices will be moving down. What is imbalance? What is that I explained in lesson 2? When institutions are fighting with each other, equal demand and supply, probably one institution or maybe a group of institutions may take a decision at the same time. What decision? This balance, whatever the equal demand and supply is moving, they want to break that balance. Because they want to break that balance, what they do? Their order flow they increase. Maybe whatever the order flow currently they are having, maybe 5 times or 10 times or 15 times more they increase their order flow. The moment they increase the more order flow, what happens? The balance, whatever prices are moving in a balance, the balance will be disturbed. Why balance will be disturbed? Because their demand might be increased than the supply, or supply might be increased than the demand. In this example, this is a supply zone. That's why institutions, they added maybe whatever the balance they are moving, from that balance they increased the power. They added more sell orders. These sell orders consumed all the demand. Still there are a lot of pending sell orders. Now there is no more demand, prices are moved down. That is represented by leg out candle. Because leg out candle, instead of moving in a narrow range, all of a sudden the prices are coming out of this balanced area. That means in this balanced area, institutions added extra supply. That extra supply consumed the existing demand, and there is no more demand. Now prices are pushed down, and because of that price action, the remaining order flow is not consumed. Because it is not consumed, they are residing within this area as a pending orders. Next time when prices retraces here, in this area, the pending orders again they execute and again they push the market down. That way we are getting profits in the retracement. When prices are again going back, at the time we are taking the trade. Until institutions push the price, we may not be knowing institution participation is there or not. The only price action clue is the leg out is the price action clue, indicates there is an institutional participation. And because of that we are detecting here institutional pending orders are there. Okay, fine. Maybe many of you might have understood this concept already. Now you can ask me a question, why are you telling this story again? What is the reason? The reason is you need to understand when two institutions are fighting with each other, whatever the imbalance is taking place, imbalance means your leg out candle, whatever the imbalance is taking place, that imbalance indicates here is a order flow when institutions are fighting each other. Now I am going to ask you a question. Please concentrate. This is the important question I am going to ask you. Now instead of two institutions are fighting, instead of two institutions, or maybe not two, a group of institutions. Instead of a group of institutions are fighting with each other, then who will be fighting? Institutions are not fighting. Then who is fighting? Retail traders like us are fighting with each other. If retail traders are fighting with each other, when you have such kind of price action happen, does this price action is having any significance? Retail trader and retail trader are fighting with each other. Because of their fight, these candles are formed? Does it have any sense? Can we accept such kind of zones? Now tell me, what could be your answer? Yes or no? Can we accept means yes. We cannot accept means no. Mostly, most of you might be saying no. Because the imbalance should be from the institutions, not for the retail traders like us. If retail traders like us are fighting in this area, definitely it is a weak area. After that institution participated, and even if he push the price, he don't require a huge order flow here. Some adding a few extra orders and you can push the price. Next time when prices are retracing and they are going back, easily the zone will be violated because the order flow is very weak in that area. When two institutions are fighting with each other and we have such kind of base candles, definitely institution need to add so much of order flow to push the prices down. If retail traders are fighting with each other, institution require only a small orders to push these prices down. Did you understand the difference? Institutions are investing crores of rupees, several hundred crores of rupees, and they are fighting with each other. And probably if the balance has to be violated, that means we need to break this balance and make it imbalance. Imbalance means our leg out is imbalance. So whatever prices are moving in a balanced way, we are changing to imbalance. Then institution should add maybe more hundreds of crores of rupees. Assume institutions are adding some 50 crores or 100 crores and they are fighting with each other. And now all of a sudden another institution added 500 crores of data orders and pushed the price down. Out of those 500 crores, maybe 150 crores of the orders has consumed and took all the demand. And remaining orders are pending and prices came down because the entire demand is consumed by the institutions. Maybe there could be a pending of 300 or 350 order flow might be still there. Next time when you go from that 350 crore pending orders, once again they are pushing the prices down. Probably next time we might have consumed another 150 crore orders here and pushed the prices down. This is what happens when institutions are fighting with each other. If retail traders are fighting with each other, what is the scenario? Here, all the retail traders, one part of the retail traders are buyers, another part of the retail traders are sellers. And if you combine all our orders, maybe it might be some 20 crores and another 20 crores of the other sellers. They are fighting with each other. 20 crores of rupees versus 20 crores. And 20 crores buy orders and 20 crores sell orders, they are fighting with each other and they formed these candles. Now one institution observed. What he decided, okay, let me add, instead of 500 is not required. Let me add 100 crores here instead of 500 crores. Or you may say, okay, let me add some 60 crores and let me push the price. He added 60 crores here and all these 60 crores, out of 60 crores, around 30 crores consumed all these orders within this area and remaining 30 crores pending orders are here and they pushed the prices down. Next time again prices reaches here, maybe this 30 crores may not be good enough to hold this zone. Maybe the demand is strong. It might have consumed the entire thing and violated the zone and go up. That possibility is there. Now the question is, these candles are formed because of institutional participation or because of the retail traders' participation? You may say, because we are using F&O stocks. Mostly in almost all the F&O stocks, institution participation will be there. So that is the reason why we can assume all these candles are because of institutional participation. That is what you may argue. Maybe your argument is correct. or 90% or 99% your argument is correct. But not in this case. Actually, I expected this answer from you. That is the reason behind asking this question. Today morning, when I am fine-tuning these zones, all of a sudden I observed these candles are not because of institutional participation. These candles are because of retail traders' participation. Then immediately I decided to write a post in the group. Maybe I was thinking maybe some of you will take the trades and publish the post in the group. Almost I am about to write the post. Then again I realized, no, if I put a post, these people don't understand. They take it in a light way. Let them suffer. Let them take the trade. Let this, in case if they take the trade, it will hit the stop loss. Okay, anyway, you will be losing a small amount of the money, minimum amount. Your risk only you will be losing. But even if it is risk, some pain will be there, right? With the pain, if you learn, probably you will get complete clarity at the time when I give the explanation. Maybe whatever the risk you are losing, you can assume that is the fee you paid for learning this concept. This is going to be a learning for you. That was my intention. I stopped because I have seen many times when I tried to explain some very good points. You people took it in a light way. You means majority of the people. Few people are learning. The number is very small. But many of the people are not concentrating while learning the most important concepts. That's why I thought, okay, let you people get pain, some pain today. Let your trade stop out. I know this zone is going to stop out today. Because I know these candles are not from institutions. These candles are from retail traders like us. We created those candles. So that is the reason why today, once the zone is violated, I put a question in the group. So whoever seriously took that question, they commented in the comment section. Your reasons. Maybe your reason is right or wrong, let it be. But you people really worked on this. I must appreciate you. That means those whoever put the comments in the comment section, they are having a lot of interest to learn the subject. That is what I am assuming. At least I remember these people. They are the serious traders. They are working hard. And they are trying to learn. Of course, some of you people are new people, newly learning. I am not talking anything about you. Whoever is learning supply and demand zone price action, not completed our courses. I am only talking about the traders who already completed the course. Who already completed the course outside earlier. Probably they are trading for the last 1 year, 2 years or 5 years, 6 years. Some people who are trading for last 6-7 years also. Based on supply demand zone. Still they are making mistakes. The reasons, at the time of learning, some fundamentals they didn't learn properly. And those people didn't attend, some of the people didn't attend our training lessons also. If they would have repeated our training lessons, many of their gaps would have been filled by this time. Some people, they paid 1.5 lakh, 2 lakhs rupees outside in some training institutions. They finished the course some 5-6 years back and they've been trading last 5-6 years. And they gave me feedback. They are attending the training, again repeating everything. And they learned many new points which they didn't learn earlier. And they commented earlier, they commented some 1 month back, 1.5 month back. If you see training lessons, you will see their comments. Now they got answers to many of the doubts they are having for the last 5-6 years. Probably they got better knowledge. Probably they got better knowledge after completing our course. Again. But those people who are not at all bothering about the training sessions and still focusing on the trades, definitely you will get a hit if you don't complete our training lessons. I told you, lesson 2 itself you learn many new concepts, especially those people who completed our supply and demand zone training program. And if you complete lesson 1.1, lesson 1.3, 1.2 is basic lesson. If at all any learning is there in lesson 1.2, you will be having some formulas you will be learning in lesson 1.2 related to calculation of some range body related concepts. But lesson 1.1, 1.3 you have important learning. Lesson 1.1 important point is prices, how prices are moving in a narrow range. I clearly explained in 1.1. And lesson 2, my favorite lesson, I gave you complete reason behind how institutions behavior. What is the reason behind creating that leg out candle? By using the concept imbalance. Because we are supply demand zone price action traders based on imbalance. That imbalance happened because of the institutions or because of the retail traders. This is the biggest challenge. And all these base candles are created because of the institutions or because of the retail traders. That is another biggest challenge. That's why we trade only those stocks where institution participation is there. Other stocks we don't trade. Other stocks also, these base candles will be created because of retail traders participation, not institutional participation. That is the reason why in one of our, I think some 2 months back, I didn't remember exact date, but you can find in our old post in our Telegram channel. If you go through the old post, you will find some 2-3 months back, 2 months or 3 months back, I posted few Excel sheets. The Excel sheets having where the volume is more. Volume means not a trade specific volume. It is stock specific volume. 1 year average volume, daily average volumes. 1 year daily average volumes. Based on that, we have filtered the stocks. Daily average volumes are more. That indicates institutional participation will be there. Daily average volume more than 100 crores, 200 crores, 500 crores. That is the way multiple Excel sheets I have generated and I posted in our. And more volumes are there, and higher the participation from the institutions. And those stocks having demand and supply zones, they work accurate way. Wherever domestic investors, retail investors like us, we participate, but institution participation is not there, or maybe less once in a while. In such kind of stocks, if you create all these demand and supply zones, they won't be having much significance like this particular zone. This zone is created by the retail traders, not the institution. I know you are having a lot of doubts. All you people are having one common doubt now. The common doubt in our mind is, how can you say this zone is created by retail traders, not the institutions? That's why in the Telegram message, today's Telegram message, I gave you a clue. What is the clue? How deep you are analyzing the chart. I'm happy with that. You people are analyzing deep. By seeing the messages, at least I understood. Whether it is correct or inaccurate, I am not worrying about that. You are trying to analyze the charts in deep. Once your experience grows, slowly the mistakes you are making, you will correct. I am happy. From the messages you send in the comment box, I am happy with that. You are understanding. But second point you missed. What is the second point? How deep you are observing the market. I told you how deep you are analyzing the chart and observing the market. Observing the market. That is the place you missed it. If you properly observe the market, definitely some doubts will rise in my mind. I got the doubt. I got an issue also. A particular day, only retail traders are participated. No institutions are participated. That day a doubt came in my mind. Suppose if any high liquidity zone is created in that zone, because software doesn't know. Software will work based on certain conditions. Based on the conditions, it will assume there is a high liquidity. But that is because of the institutions or because of the domestic investors like us, that means retail traders like us. Software never knows that, because software is using open, high, low, close parameters. It can't find who is participated. But we can find. Because this is a stock, institutional participation will be there. It is an F&O stock. But even then, why I am saying these candles are created by the domestic institution, the reason is during this month, March month, this is March month, in the beginning, do you remember there was a special trading day on a Saturday, few hours. Saturday we had a trading on these candles or on that day only. See here, this is Saturday 2nd at 12 o'clock 10 minutes. Saturday 2nd March 12 o'clock 15 minutes. Saturday 2nd March 12 o'clock 20 candle. This is Saturday 2nd March 12 o'clock 25 minutes candle. This is Saturday March 12 o'clock 40 minutes candle. All these base candles are created by the retail traders like us, because Saturday there is no institutional participation. The reason is that is only a special day, few hours day. Institutions, they don't participate. It is a holiday for them. For all the brokering companies, major companies, they don't really participate in the trading day, the special trading day. Even if you look into the overall volume of this particular zone, you see very, very low volume compared to the remaining days volumes. See next day what happened. This is the candle on Monday, March 4, 2024. 4th March 2024, 9:15 candle. Probably this candle would have been created by institution. He might have added few extra orders here and pushed the prices down. That's it. You don't require to place a huge orders here. 9:15 candle itself, it came down. Opened with a gap down, it opened and prices moved and again came down. That's why we are added the entire within this gap area, we added the hidden body. That's why we said it is a leg out candle. Institution doesn't require any strain to push because these candles are from retail traders. Just one shot, how institution pushed the entire break this imbalance. Broke this entire balance into imbalance. Just one candle he did. How easily he did. We people are fighting here. It's not institutions. When we are fighting, don't take trade in that zone. It's a meaningless. There won't be any strength in that zone. If you would have remembered, Saturday is a special trading day, and if any zones are created on that day, because it is a retail traders fighting, that's why everything, the whole day, the trading day is like this only. See, small, the entire day it is in a narrow range. And next candle prices came down. If you would have kept that point in your mind, then you would have observed here. Because I've been worrying about this for a long time. Because I know we get a hit on this particular day, and it happened today. Today morning when I am analyzing this stock, all of a sudden I saw, when I placed this mouse in the candle, I saw Saturday 2nd March. And immediately I realized Saturday trading means it is on that day, special trading day. That's why I thought of sending a message in our group, but finally I realized, no, there is no, you people don't seriously understand if I keep a message in the group. You need to get a hit. Let you people lose. It is anyway small amount you will be losing. You can at least understand you are investing that money for your learning purpose. Generally when we lose even small money, some pain will be there. That pain will teach you the concept. Next time when you have such kind of trading sessions, you will be very careful. Because every year we have one such kind of trading session. On Diwali day. Diwali day we have only 1 hour trading. On Diwali day it is a fight between retail traders. Such kind of candles you should always remember. You should keep that point in your mind. That's why I told you observing the market is also important. Not only analyzing the chart. Because every year we have one Diwali day. On the day, whatever the special trading session is there, that is for the retail traders. That day we are fighting with each other. Institutions mostly they won't be there. Institutions. That's why volumes are very less on that day for a majority of the stocks. If any stock on Diwali day, huge volume is there, then maybe you can assume in that stock, institution is participated. But generally it won't happen. So this is the reason why it is going to be a lesson for you. Because this lesson is required, every year you have a special candle you will get. This year we got 2 special candles. This is special trading day. Again we get maybe October or November in Diwali day we will be having again that kind of situation. Any zones created on that day, we should better to avoid those zones. When institutions are participating, when you are using institutional supply demand zones, you must make sure institutional participation is there in that zone creation. If a zone is created without institutional participation, better avoid that particular zone for your trade purpose. Mostly you won't get success in that zone. And your METROPOLIS is one such kind of zone. Actually, I expected at least one of us from our group would have observed this point. Such kind of mindset you people should develop. Such kind of observations, not only on the zones, what kind of data. Maybe I am more, maybe the reason it's not because of my experience. Maybe I developed the software. I know how software will behave. What conditions will impact the software. I know all these reasons. Maybe that could be one reason why I had a special focus on this particular zone. But now you people learn from my experience. How I gained the experience, it is a different story. It's because of a long time I was in the market, or because of the software development I got this knowledge. Whatever it is, leave it. But today you gain knowledge from me. So don't forget this. Whoever is listening this video today, it's an important video. I am sure after few days this will become an old video. The moment it will become old video, all the new people are joining and new people learning, new people are entering, and again they are doing trading. They might have ignored this trade. Maybe I am adding this into the playlist, our NeoStock terminology playlist. We have special videos. All important videos will be there. I will be adding. Some people are listening the videos from that playlist. Some people ignoring that. They may not be knowing the importance of those videos. Probably they all will be missing this learning, because it's not possible for me every time teaching this concept. Because it happened today, you people will realize it is an important concept. And next time again in Diwali day, whenever the candles are created, those zones always you will be very concerned and you will be very particular, and you keep an eye on those zones and you will try to avoid those zones if you find any in the near future when you are trading. Hope you got clarity why it is failed. This zone is created by the retail traders like us, and trading in such kind of zones is meaningless, because we are trading on institutional demand and supply zones. We are not trading on retail traders demand and supply zones. There is a difference. You all agree, right? We are trading on institutional demand and supply zones. We are not trading on retail traders' demand and supply zones. But this supply zone is a retail traders' demand and supply zone. That's why we are not supposed to trade on this zone. You may ask a question, is this zone going to fail always? Need not be. See, maybe institutions may decide when prices enter, let us create a new zone and push the price down. If today let us assume institution without violating this zone, let us assume they created a new 5-minute zone within this area and pushed the prices down. Maybe next time we can plan a trade in the next retracement. Definitely not now. See, today this zone is having some pending orders because the leg out is created by the institutions. The order flow might be very small. That's why for some time it has given a resistance. Some time. After that again easily it is violated. Because at the time when institution created the leg out, they might have added a small order flow here. Small order flow. That is not good enough to hold. To give a push up to next. This is the 15 minutes zone somewhere here. It didn't give a push up to here. Just a small push and again it is violated. So this is the reason behind violation of this particular zone. So it is not a valid institutional supply zone. That is the reason why we have to reject this zone. Hope you got the clarity. Okay, remaining trades, we didn't get any trades. One is India Cements. Let me go to the daily time frame. This zone I already explained earlier how we fine tune. We didn't get a trade. I'm not explaining again how to fine tune. Please check the earlier videos. I have explained this. IRCT is also same. Previously I explained you how to fine tune. Maybe yesterday or day before yesterday's one of the videos I explained. IRCTC. METROPOLIS we discussed, and National Aluminium. So this is a newly created zone. I think this is the first time prices came. Let me explain how I fine tune. So this is a daily time frame. We have a rally 1, 2, 3, 4, 5 base candles and a drop candle. Now inside this we identified 275 minutes high liquidity zones. This is the one drop 1, 2, 3, 4, 5 base candles and again a drop. And here again we have a drop 1, 2, 3 base candles and again a drop. Not a great leg out but follow through candles. Okay, considered for fine tuning the zone and finding the real order flow. And inside this again we fine tuned with 15 minutes. This is a 15-minute zone. We have a leg in 1, 2, 3, 4, 5 base candles and a drop candle. And again we have a drop, 3 base candles and a drop, 15-minute zones. And here also we have a leg candle, 2 base candles and a drop candle. But this 15 minutes we didn't fine tune. The reason is the 5-minute structure is not good. Let me show you. Inside 15, now we are drawing 5-minute zone. Because all these are all, see here we have 1, 2, 3, 4, 5, 6, 7 base candles. So that is one reason. And another one is a rally, draw base rally inside this. So structure is not at all good. So don't want to plan any trades inside this. And here we have a leg candle, rally 1, 2, 3, 4 base candles and a drop candles. And prices already tested this zone. But again we have a rally, 2 base candles and a drop is created once again within this area. Maybe you can accept a trade. Sometimes we don't know. This might be violated also. But here you see here, this is a good zone. This is not a base candle because it had the hidden gap. Definitely this is a leg candle, leg in. If you add, This is a small gap, here small gap, that's why we can consider base. And then we have a drop candle. So here we fine tune this zone, and also see here just before how it is holding the prices. Even here see how it is holding the prices and pushing. Not only holding, a push is also needed. Here also see here, not only hold it, after that there is a push. The prices are moving here or here and here like this, maybe this you can't trust this zone much. But when you have such kind of price structures, prices reaching and pushing down, definitely we can say there is a strong order flow. Such kind of zones work very well many times. So finally, this was the zone planned for the trade. These two are not considered. But anyway, today prices did not enter into this zone. We didn't get a trade. And last one is LTTM, already explained, L&T Mindtree. It is a crazy trade we took during last 1 hour trading session. And trade closed only just before 5 minutes closing the market. So this is about high liquidity zones identified. Hope you learned some important point from this video. Especially those zones created by the retail traders you should not consider. When volumes are very heavy, volumes means overall average volumes. You should not see trade specific volumes. In demand and supply zone, we never look into the trade specific volumes. We look into the average daily volumes. And volumes we are using for confirming institutional participation, not for confirming the demand zone or supply zone. Volumes are required for indicators trades, but in demand and supply zones, for trades we don't use the volumes. For stocks we will be using the volume. In this stock, a huge volumes are there, daily average volumes. That means institutional participation is there. For that confirmation we are using volumes. In NeoStock, terminology playlist, terminology of NeoStock, with that name, some playlist will be there. All important videos I am keeping in that playlist. I explained the volumes. Volumes for demand and supply zone versus volumes for indicators. If any of you did not listen, please listen that video, then you will get complete clarity. What way we use volumes in supply demand zone price action. If you are taking indicators concept and you are comparing those indicators concepts with supply demand zone, it is totally meaningless. Okay, this is about today's session. Hope this session might be useful to you. Let us all meet again in our next video. Thank you.